Welcome to our deep dive into the world of unusual tax loopholes and their significance in today's financial landscape. In this video, we'll explore some creative and often overlooked strategies that can help you legally lower your tax bill. You might be surprised to learn that there are numerous ways to navigate the tax code that can lead to significant savings. From quirky deductions to lesser-known credits, we'll uncover the secrets that savvy taxpayers use to their advantage. Our goal is to equip you with the knowledge to make informed decisions about your finances while keeping the IRS at bay. So, whether you're a seasoned tax filer or just starting out, stick around as we reveal these fascinating tax strategies that could change the way you think about your tax return. Get ready to unlock the potential of your finances and discover how to keep more of your hard-earned money in your pocket. Understanding tax loopholes. Tax loopholes are provisions in the tax code that allow individuals and businesses to reduce their tax liabilities legally. These gaps or ambiguities in the law can be exploited to minimize the amount owed to the government, often through deductions, credits, or exemptions that may not be widely known. It's crucial to differentiate between loopholes and tax evasion. While loopholes are legal strategies to lower taxes, tax evasion involves illegal practices to avoid paying taxes altogether. Understanding these loopholes is essential for effective financial planning, as they can provide significant savings and help you make the most of your income. By being aware of the available options, you can strategically navigate the tax system, ensuring that you're not leaving money on the table. In the following sections, we'll delve deeper into some of the most unusual and beneficial tax loopholes that could work in your favor. Home office deductions. For remote workers, home office deductions can be a game changer when it comes to reducing tax bills. To qualify for these deductions, you must meet specific eligibility criteria, such as using a dedicated space in your home exclusively for work. This could be a separate room or a designated area that is not used for personal activities. Common deductible expenses include a portion of your rent or mortgage, interest, utilities, internet costs, and even office supplies. For instance, if you use 10% of your home for business, you can deduct 10% of these expenses. The potential savings can be substantial, often amounting to hundreds or even thousands of dollars, depending on your situation. By taking advantage of this loophole, remote workers can not only lower their taxable income, but also create a more financially sustainable work-from-home environment. In the next section, we'll explore more deductions that can benefit you. Health Savings Accounts, HSAs. Health Savings Accounts, HSAs, are a powerful tax advantage savings tool that can significantly benefit your financial strategy. When you contribute to an HSA, you can enjoy triple tax benefits. Your contributions are tax deductible, the funds grow tax-free, and withdrawals for qualified medical expenses are also tax-free. This means that not only do you reduce your taxable income when you contribute, but you also avoid taxes on the growth of your savings. HSAs can be used to cover a wide range of medical expenses, including doctor visits, prescription medications, and even some over-the-counter items. By utilizing an HSA, you can effectively manage healthcare costs while maximizing your tax savings. As you plan for your financial future, consider incorporating HSAs into your strategy. They not only provide a safety net for medical expenses, but also serve as a smart way to save for retirement, as unused funds can roll over year after year. Charitable contributions. Charitable donations can be a fantastic way to support causes you care about while also providing significant tax deductions. To qualify for these deductions, contributions must be made to qualified organizations such as nonprofit charities, religious institutions, or educational entities. Eligible contributions can include cash donations, goods, and even volunteer expenses. However, it's essential to keep accurate records of your donations, including receipts and acknowledgement letters from the charities, as these documents are crucial for substantiating your claims during tax season. Not only do charitable contributions allow you to give back to your community, but they can also reduce your taxable income, leading to potential savings on your tax bill. So, as you consider your philanthropic efforts, remember that supporting the causes you believe in can also be a smart financial move. In the next section, we'll explore more ways to maximize your tax benefits while making a positive impact. Retirement account. Contributions. Contributing to retirement accounts like traditional IRAs and 401ks offers significant tax advantages that can enhance your financial future. With a traditional IRA, your contributions are often tax deductible, meaning they can lower your taxable income for the year you contribute. Similarly, contributions to a 401k plan are made with pre-tax dollars, which also reduces your taxable income. This means you can save on taxes now while building your retirement savings for later. Additionally, the funds in these accounts grow tax-deferred, allowing your investments to compound without the burden of annual taxes. To maximize these benefits, it's crucial to start contributing early and consistently. The earlier you begin, the more time your money has to grow, and regular contributions can help you take full advantage of employer matches in 401k plans. In the next section, we'll explore more strategies to boost your retirement savings and secure your financial future. Education tax credits. Education tax credits can significantly reduce your tax liabilities while supporting your pursuit of knowledge. Two of the most popular credits are the American Opportunity Credit and the Lifetime Learning Credit. The American Opportunity Credit offers up to $2,500 per eligible student for the first 4 years of higher education, covering tuition, fees, and course materials. In contrast, the Lifetime Learning Credit provides up to $2,000 per tax return for qualified education expenses, applicable for any level of education and even for courses taken to improve job skills. To qualify for these credits, you must meet specific eligibility requirements, including income limits and enrollment status. Taking advantage of these education tax credits not only helps alleviate the financial burden of tuition, but also encourages lifelong learning. So, whether you're a student or a parent, consider exploring these opportunities to maximize your tax savings while investing in your education. In the next section, we'll discuss more ways to enhance your financial strategy. Investment loss. Deductions. Investment losses can be a valuable tool for offsetting capital gains, and understanding this concept is essential for effective tax planning. Tax loss harvesting is the strategy of selling investments that have declined in value to realize a loss, which can then be used to offset any capital gains you may have incurred from selling other profitable investments. For example, if you sold stocks for a $5,000 gain but also had a $2,000 loss from another investment, you can subtract the loss from the gain, resulting in a taxable gain of $3,000. This can significantly reduce your tax liability. It's important to be aware of capital gains tax rates, which can vary based on how long you've held the investment. By strategically selling investments and utilizing losses, you can optimize your tax situation and keep more of your earnings. In the next section, we'll explore additional strategies to enhance your investment approach. Business expense deductions. Small business owners have the opportunity to significantly reduce their taxable income by deducting various business expenses. Common deductible expenses include travel costs, office supplies, equipment purchases, and even home office expenses if you operate from home. For instance, if you travel for business meetings, you can deduct airfare, lodging, and meals, making it easier to manage your expenses. However, it's crucial to keep detailed records of all your business transactions, including receipts and invoices, to substantiate your deductions during tax season. Accurate record-keeping not only helps you maximize your deductions, but also ensures compliance with tax regulations. By being diligent about tracking your expenses, you can uncover potential savings that directly impact your bottom line. So, as an entrepreneur, take the time to understand what you can deduct and make the most of these opportunities to enhance your tax savings. In the next section, we'll explore more strategies for small business success. In this video, we explored a variety of unusual tax loopholes that can help you significantly reduce your tax bill. From home office deductions and health savings accounts to charitable contributions and investment loss deductions, these strategies offer valuable opportunities for financial planning. We also discussed the benefits of retirement account contributions and education tax credits, all designed to help you keep more of your hard-earned money. Utilizing these tax strategies is essential for effective financial management, allowing you to maximize your savings and invest in your future. If you found this information helpful, we encourage you to subscribe to our channel, like this video, and share it with friends and family who could benefit from these financial tips. Your engagement helps us create more content that empowers you to take control of your finances. Thank you for watching, and we look forward to seeing you in our next video.